Welcome to the 2% Brief. My name's Richard and today is Saturday the 11th of April 2026. And what a week it's been! The single dominant theme across every market this week, whether we're looking at precious metals, equities, oil, crypto or other economic data, has been just one word: Iran. Now, before we take a look as to how this has influenced these various assets, a quick request to ask you to subscribe to the channel and to press the notification sign, because I will be producing a very interesting video this coming week on the gold to silver ratio, highlighting when you should take account of it and when you shouldn't. And so for you to be notified of that video when it appears, you need to have subscribed and press that bell sign. Also, if by the end of this video you like what you've seen and heard, give us a thumbs up. It will help us to spread this video to a wider audience. Okay, let's get into the meat of what's gone on in the past 7 days. Let's start with the metals. Gold closed at $4,751 an ounce, up 1.5% on the week. A solid gain, though gold remains well below its January all-time highs, and the weekly move was the more modest of the three metals. Silver was the standout, closing at $76.15, up 4.2% on the week. That's silver doing what it does, amplifying gold's move when sentiment shifts. Analysts have been calling silver turbo gold for good reason this year, and this week was a textbook example of that. And let's not forget platinum, which doesn't always get the airtime it deserves, closing at $2,054, up 3.3% on the week. Its industrial demand profile helping it catch a bid alongside the broader precious metals complex. Now, the driver across all three was the US-Iran ceasefire, announced Tuesday evening, which weakened the dollar. The dollar index actually closed at 98.65 and reignited expectations of earlier rate cuts. When the dollar weakens and rate cut hopes return, hard assets get a bid. Context matters though. Since the war began at the end of February, silver has been down nearly 20% and gold has been under severe pressure. This week was a relief rally, not a breakout. Whether it sustains, of course, depends entirely on what happens in Islamabad this weekend. More on that in a moment. By the way, did you press that subscribe button and bell sign? Just checking. Equity markets had their best week since November, driven almost entirely by that ceasefire announcement. In the United States, the S&P closed at 6,816, up over 3% on the week. The Nasdaq finished at 22,902, up over 4%, and that was its best week since November. And the Dow closed at 47,916, up roughly 3% as well. Over here in the UK, FTSE 100 closed at 10,600. Up approximately 1% on the week, its third consecutive weekly gain, boosted by its heavy weighting in commodities, mining stocks and energy stocks, which have been among the standout performers of 2026. But let's be clear about the wider picture. The S&P formed a death cross in late March, where the 50-day moving average crossed below the 200-day and remains down around 4% for the year. The energy sector has been the big winner of 2026, while tech has struggled. Now, oil is the story of 2026, and this week was its most dramatic chapter yet. Brent crude closed at $95.20 and WTI crude at $96.57. Both well off the highs we saw earlier in the conflict, when Brent spot prices were trading above $120. The ceasefire announcement on Tuesday triggered the biggest single-day drop in WTI since April 2020. 6 years ago, more than 16% in a single session. But here's the critical point, and do not let the headline price fool you. The Strait of Hormuz has not reopened. The ceasefire has not restored normal tanker traffic. The IRGC is still controlling who goes through and who doesn't. Reports this week suggest Iran is demanding ships pay tolls, reportedly in cryptocurrency, I wonder why, to transit the strait. 3 days after the ceasefire was announced, there has been no meaningful increase in vessel traffic. Now, the EIA's latest short-term energy outlook is sobering. Production shut-ins are expected to peak at 9.1 million barrels per day in April, the largest supply disruption in history. US retail gasoline is forecast to peak close to $4.30 a gallon this month, with diesel above $5.80. Goldman Sachs has warned that if the strait remains largely closed for another month, Brent will average above $100 for the rest of 2026. The gap between the future price and the physical spot price for oil remains enormous, which tells you the market knows the reality on the ground has not changed, whatever the diplomats and politicians are saying. Let us quickly look at crypto. Oh, did you subscribe? And how about that like button? Have you pressed it yet? If not, are you trying to make a grown man cry? Okay, just teasing. Bitcoin currently stands at $72,860, up sharply on the week, having been stuck below $65,000 for much of March. The ceasefire was the catalyst. The announcement triggered a surge to around 72,700 on Tuesday night, with nearly $600 million in leveraged futures positions liquidated, the majority of them being short sellers. A classic short squeeze. Bitcoin has been trading purely as a risk asset this year, which means it goes up when geopolitical fear recedes and down when it rises. The Clarity Act, crypto regulatory legislation being advanced in Washington, is providing some additional tailwind and is being watched as a potential structural catalyst. That said, roughly 75 to 80% of the top 50 altcoins remain deeply in the red. This is a Bitcoin market, and even Bitcoin is still well below its 2025 highs. Now, the big number this week was Friday's March CPI print, the first inflation reading since the Iran war began on February the 28th. Headline CPI came in at 3.3% year-on-year, up sharply from 2.4% in February, the highest annual rate since April 2024. On a monthly basis, prices rose 0.9%, triple February's pace. Gasoline soared 21.2% in March and accounted for nearly three-quarters of the entire monthly increase. But the silver lining is in the core number. Stripping out food and energy, core CPI rose just 0.2% for the month and 2.6% annually, slightly below forecast, which tells us the underlying economy is not yet in a wage price spiral. The Fed is expected to look through the energy spike for now, and the Fed funds rate remains at 3.5 to 3.75%, with one cut penciled in for 2026. Though the Fed minutes released this week showed some members are now open to raising rates if inflation stays above target. The Fed meets on the 28th and 29th of April. That meeting just got a lot more interesting. And geopolitics, the macro picture. A war that began on February the 28th with US and Israeli strikes on Iran has reshaped every single market we've discussed today. The 2-week ceasefire announced Tuesday is real but fragile. Israel's operations in Lebanon continue outside the scope of the agreement per Netanyahu. The Strait of Hormuz remains largely blocked, and this weekend Vice President J.D. Vance leads a US delegation to Islamabad for talks with Iranian officials. Those talks will determine whether the ceasefire holds, whether oil prices stabilize or spike again, and whether the relief rally in equities and precious metals has legs, or whether we give it all back next week. Separately, there are early signs of progress on Ukraine-Russia peace talks, which boosted European sentiment, with UK airline stocks among the beneficiaries. Now, there are 4 things to watch out for next week, and the first is, of course, the outcome of the talks at Islamabad. The other 3 important events are covered tomorrow evening for my Substack Inner Circle members. And if you want to find out what they are and how to position yourself in preparation, please click on the Substack links in the description and comments section below. Now, if, as I mentioned at the start of this video, you like what you've seen and heard, please subscribe to the channel, press the notification sign, and also share it on social media. The larger this community grows, the more experiences we can share. Also appearing on screen now are various videos that we've recently produced. If you haven't had a chance to watch them, please do so. And watch out this coming week for that gold to silver ratio video. It's thought-provoking, and it should help you determine your investment decision when considering transferring from gold to silver or from silver to gold. Thank you for watching. I look forward to seeing you soon.